Good morning. Welcome to the mortgage rate forecast with Scott Criss, your mortgage rates and news. It is June 21st. Let's get started with the charts. As you can see here, pretty bad open yesterday. Today, we're kind of maintaining that. We're currently trading at $102.72 this morning, down from just right about 103. So here's where we're at. Our next line of support is right where we're trading, guys, at 102.72. You can kind of see where we're at here. This support is derived from the trading back this day, yesterday, and today. So we keep touching that 102.72. Our next floor of support is going to be down at 102.55. So that's like 20 basis points different, or if you're getting a mortgage, about a quarter of a point. So pretty significant fall there if we can't hold this 102.72. Resistance is coming in above us. Now that 103, that was our support, is now our resistance. So anyway, reports, zilch, really nothing's out today. There's some news in treasuries, things like that. I'm just going to skip over that. But the big news is the Brexit. And it was kind of funny. I was watching our local news this morning, and they were actually talking about this. I had mentioned it to you guys last Thursday, but this is having a pretty big impact on the economy. Now, if we go back to yesterday's trading, a lot of this is, from the Brexit talk, which, if you're unfamiliar with what that is, it's the BR stands for Britain, and then of course exit. And this is actually the UK thinking about exiting the European Union. So this is actually causing some havoc in the economy because, again, investors, they don't like change. And so I know I keep talking about that, but they don't like change. And this could actually have a pretty big impact regarding the US's import trade with Britain. So, or I should say the UK. So the thing is, that's causing some volatility. And we got to keep a pretty close eye on that. That's pretty big news. Yellen came out. She's still out, but kind of what she's throwing down is pretty unlikely that we're going to see increases in the Fed rate or the short-term rate this year. So anyway, we'll kind of see how that baby plays out. But that was actually kind of bond friendly. And as I mentioned, yesterday's trading was pretty poor. Some of it news from the Brexit, but other just really good oil rally. You probably saw the Dow was up pretty nicely yesterday. And so the investors were just taking their money out of the safe haven, which is like gold and bonds, and putting it into those stocks. So that's why we saw the major sell-off here yesterday. At any rate, to kind of quantify where we're at, Freddie Mac reported that the average rate last month was 3.6, and the average consumer paid a little over half a point for that. Currently, we're trading at about 32 cents better than that. So, one would assume that the average consumer getting a 3.6 rate might pay somewhere around a quarter point. So that's the news. Now let's get to the forecast. Man, it is all over the board here, guys. We have inconsistency across the board, both on short term and long term. So the analysts are coming out, but the inconsistency is more of a negative tone. It's either neutral, if not bearish, on bonds, meaning that we could see interest rates or fees for those rates get a little bit worse, not only over the coming days, but maybe perhaps on the long term. So we got to be really careful. We got to really watch these things. I'm going to have a really broad trading range just because I think the Brexit could have a very positive, but it could also have a very negative impact on how the mortgage-backed securities are trading. So I'm gonna call out 102.55 to $103 trading range until this coming Thursday. And as far as 30-day lock considerations, if you're a gambling man, I would say, hey, throw the dice, float ahead of the Brexit votes, because if the UK does exit the union, I mean, we could see the stock market just crumble. We could see mortgage-backed securities really do well. So if you're a gambling man, I would hold off. But if you're not a gambling man, you want to play it safe, well, the thing is, you probably already locked in last week when I said, hey, take those gains and run. But if you're a conservative person, but you didn't lock in last week, You know what? If you want to play it safe, you may want to lock in before the Brexit votes. So anyway, that is it, guys. We'd love to hear what you think. Do you think bonds are going to get better, get worse? Do you think rates are going to go up, get worse? Let me know. Leave your comments down below. Don't forget to like the video before you go. And if it's your first time, subscribe at the left. That will keep you updated on the market. And if none of this makes sense and you're like, what the heck do these bond things mean? As you probably already know, top right. Click this little guy scratching his head. He'll take you to Mortgage Bonds 101, give you the basics of how these things trade and impact you as a consumer getting a mortgage. Anyway, that's it for now. I will see you guys on Thursday. Take care.